Okay, so finishing off with this problem, I've posted everything to the T accounts. If we looked at my Excel, I looked at all the entries down here and I've posted them to the T accounts. Right, so this is a key entry when I post my applied overhead to the work in process account. Remember, we use an applied overhead, but actual direct materials and actual direct labor, right? And if I were to sum up my manufacturing overhead, really this is just a holding account till we understand all the expenses. So if I summed up all of these indirect materials and direct labor, these are actuals, and then this is my applied amount, which is predetermined overhead rate times it by actual hours. And so over here I can see that the actual, I actually had 232, but I applied, or this estimate, sort of estimate, is 240. So have I over applied or under applied? And so if I took the difference, if I'm going to have a credit balance over here, I have over applied. And eventually that will go to my cost of goods sold. It'll decrease my cost of goods sold because we want to zero out this account. But over here I've over applied. Let's continue on with G. Production orders costing $520,000 according to their job cost sheet were completed and transferred. So now they're done being worked on. Now they're going to be finished. 520. Let's see how we have 550 in our work in process. So a good amount of them were finished, but not all of them, right? They said 520,000 were transferred out. So we're going to transfer those out and we're going to have a remaining balance of 30,000. So if I'm going to credit my work in process because they're done, I'm going to debit my finished goods, right? So the journal entry, I brought this over, maybe I'll do the journal entries over here. I would debit my finished goods. Now I have finished goods inventory, and that's an asset. And then I'll credit my work in process, right? Taking them out of work in process. And not all the 550, it's only 520,000 from the problem that was finished. Yep, so that's what my entry would look like. Production orders that costed $480 to complete according to the job cost sheet were shipped to customers during the month. The goods were sold on account at 25% above cost on account. Okay, so we're making a sale, right? We're going to have, and this is the amount of inventory. We're not selling all of our finished goods here. So we're not selling all of them. We're just selling 480,000. Yep, 480,000. So our inventory, so remember these are our 3 inventory accounts. So I could write inventory. Work in process is also inventory, and finished goods also inventory. So I could note that. Right, so I could credit inventory, finished goods for 480,000, and then I would debit my cost of goods sold. Remember that all of our product costs are inventoriable costs, so they will not be expensed until they are sold, right? And now they're finally getting expensed. So there's our cost of goods sold. Remember, we're going to make and it said it was on account, right? It said goods were sold on account. So we're going to have a receivable, and it's 25% above cost. So I would think that you could do 100% of cost plus an additional 25%. So let's do 100% or 100% plus another 25% times it by the cost. And that would give you your sales amount. And we would have sales revenue here. Oh, we forgot our cost of goods sold right here. Yep, so that would conclude your entries. You would need a sales revenue account and a accounts receivable account as well to finish up this entry.